James, thanks for joining us.
Hey, happy to be here, Trey. Good to see you as always. And welcome everyone to our webinar with, as Trey mentioned, Fidelity's Trading Strategy Desk, myself, James Savage, and my colleague, Jacob Ellis, who will be speaking shortly. Hopefully you have heard of us, but if you haven't heard of us, who we are 12 traders that are here to assist clients, well, such as yourself, with your overall trading strategy. We host a number of sessions each and every day, Monday through Friday, upwards of 4, 5, even 6 sessions within a day. And we cover a variety of topics similar to what you're seeing on your screen now. This is our landing page. So not only do we focus on topics such as sectors and industries, which is what we're covering today, we focus on options, trading tools, technical analysis, and for those of you that just want to know what's going on in the market and some of those kind of daily movers when it comes to the stock world, we also host morning and aftermarket briefings. Just like how we are in this webinar, we are live, we turn our cameras on so you can see us, and oftentimes our coaching sessions are to a smaller audience. We even get more so the ability to stop and answer questions as they come in real time. So it's absolutely going to feel interactive. So again, if you haven't joined us in a coaching session, we invite you to try us out, have some fun, and we'll be glad to have you visit us. Now, of course, the topic at hand today is going to be about industries, which is something that we don't focus on as often. Fidelity has a lot of great research. We've got quite a lot of analysts that focus on sectors. And what Jacob and I are going to do is maybe break it down a little bit further into a few sectors and talk about industries. But before we even go into industries, we do want to make sure we're on the same page of, well, what is a sector? What is an industry? So I'm going to go and just share a few slides that we put together for this, because when I've had this conversation with clients in the past, and I've asked you, and I've asked clients, how many sectors do you think there are? Or could you possibly name the sectors that exist? Oftentimes, we see a lot of industries and sometimes sectors get kind of mixed up and confused. So when it comes to kind of taking this kind of top-down look, we can start at what a sector is, and that is really just a grouping of stocks with similar characteristics. And before we get into the breakdown, let's talk about this idea. And there are a list of companies that you may recognize on this screenshot here. And something that's also very important to know about sectors and the companies that make up the sectors and the industries, that things are evolving. There are quite a lot of companies that, right, they're not static, they're not monoliths that have the same type of business models and sell the same type of products, right? Companies evolve over sometimes, right, decades. And this screenshot, I think, is a fantastic example because even a company in this, notably Visa, right? For those of you that are aware, Visa used to be part of the information technology sector, but it's actually moved over to the financial sector. And we actually wanted to use this just to really highlight how companies can be moving back and forth, and even sectors themselves are going to be evolving. And we'll talk about that shortly. But we've got this list of kind of companies above here. Now, all of these companies, right, aside from Visa, which no longer is here, they make up these industries down below. Now, ideally, I think many folks are probably familiar with this, and many of these companies have, right, this similar characteristic, and even some of them might have a bit of overlap, where you've got companies here such as software companies. Right? We're talking about that industry. So we've got companies like Apple, Oracle, Microsoft, for example. They fit in that software industry. We've got companies such as, what do we have here? Cisco, which would fall under the kind of communications equipment portion. So this is how we can kind of move from a sector to a stock, but there is quite a lot in between. And that's where it comes down to the kind of global industry classification standard. also known as the GICs or JICs. Sometimes folks like to pronounce that G a certain way, and I don't really like to hold anyone to how you pronounce it. But again, the Global Industry Classification Standard, and this tells us that there are 11 sectors that make up this standard. And this has been evolving through time. I think one of the most kind of largest change, the most recent kind of large change to this classification standard happened about, I want to say 6 or 7 years when one of these kind of sectors was created. This was when the real estate sector actually broke from the financial sector. So if we have all of these sectors, and as a reminder, right, a grouping of stocks with similar characteristics, and they can be broken down into a variety of industry groups and then industries, which is really what most folks are thinking of. The industry groups are, again, ways that we can classify things, and that's kind of what this all is. But I think once we get to the industries here, a lot of you are going to say, oh, I thought this was a sector in of itself, because these industries have a kind of very wide degree of kind of how large and maybe how notable that they are. Now, in addition to the sectors shuffling and the industries shuffling, through time, right? If all of these sectors are a piece of, say, the economy, right? The marketplace that we have here in the US, we can understand that over time, some sectors are going to be kind of growing as the not only the sectors evolve, but as the country evolves. And the weightings for these sectors and these industries are going to change through time as well. So I want to show you, again, it was purposely done where we have a bit of an older screenshot and a newer screenshot that we combined on these slides. So take a look on the left-hand side, and I want to focus on the date. This was from 2019, so not that long ago, right? It's about 5 years ago. These are the weightings for the sectors here. And what does this mean, right? This is really just looking at kind of the market capitalization of all of the companies within the industries and the industries that make up the sector. Back in 2019, the information technology, just to point out one, was 22%. As of the beginning of this year, the information technology is roughly around 29%. And I can even say, as of this point today, as we are here in June, I want to say it's actually tipped the scales and now is over 30%. So this reflects the kind of evolution of not only the stocks that make them up and the outperformance and underperformance of those stocks, but it's also a reflection of how the country evolves, right? We can imagine technology is a very important part of our economy. And if we were to go back, say, 30 years ago, well, what would the weightings have looked like? Not only would the sectors be different, right? We talked about how the real estate really wasn't even its own sector 30 years ago, but the percentages would have been very different. Percentages where sectors like staples and energy were kind of towards the top of this list, around 13, 14% respectively. So in the same way that the sectors evolve, that is going to be very true for the industries beneath these sectors that make them up. And one more slide before we kind of jump into the kind of fidelity.com experience, where we can start kind of looking at these industries, each of them one by one. I also want to talk to you about kind of why it's important to pay attention to both sectors and industries, right? Industries being a component of the sector. And Fidelity and the analysts have done some research over the years. And this is taken from one of the kind of research papers that you can find still on the Fidelity website. And we can even show you how to link to the full research report where this data came from. But what Fidelity's research has found is that sector exposure has been a significant driver of returns for stocks. And just to quickly explain this pie chart here, where the 61% of the company, well, what does that mean? Well, a stock's kind of returns, right? A stock's kind of share price, say appreciation, is primarily going to be driven by the company specific factors, right? How well is that company run? What is management like? Are their products doing well within their space? Are they gaining market share, right, for those specific products, et cetera, right? Based on the company itself. But second to those company specific factors, well, the sector is going to play a kind of the second most kind of influential factor in driving those returns. So what does this mean? Well, the company could be doing very, very well within a particular sector, but what if all the other stocks in that sector is doing well and that sector in itself is kind of having a hard time? Well, that's going to be what's called a headwind on that company's performance, right? As well as that company could be doing, as well as the products may be selling, etc. If the sector is doing poorly, that could weigh down that company's performance, and vice versa, right? Maybe a company that hasn't been doing as well lately, if the sector is kind of moving in a positive direction, that could be a tailwind and help be a benefit to the share's price. Now, within the research, there's also a few other points mentioned. Style, does it fall on the kind of growth, value, or blend? Market capitalization, is it a large, mega, medium, small cap? But ideally, we wanted to, at least as we kind of go through this introduction, just stress the importance. If anyone here is wondering, well, why should we even care if we're buying a stock, what the sector is doing or what the industry is doing? Well, Bale's research has shown that it can be an influential factor and a significant driver of the returns. So, Jake, I wanted to kind of set us up with at least making sure we're all on the same page. I know I kind of hopefully got everyone to understand the importance of following the sector and the industry. Anything you wanted to add here? If not, I'd say let's jump into fidelity.com and really start to look at some of the industries that exist.
Yeah, I think we are ready to go ahead and move forward into fidelity.com. And thank you for joining with us, folks. I'm glad to be here as well. James, you set us up really well, helping us understand a little better that differentiation. Maybe it's splitting hairs, or it feels like it, to call them industries versus sectors. What we're saying is, all right, let's try and lump together similar companies so we can understand a little better how they may react in a certain scenario. Let's continue that research here on fidelity.com. Here, I have already signed into the website, and what I will invite you to do is to come up here to the middle of the screen, right at the top, News and Research, and then we're going to come down and click on Markets and Sectors. This list is so long, maybe you haven't clicked on it before. Go ahead and click on Markets and Sectors, and you'll be brought to a page that details what's happening in the world markets, including the US markets, where we see that the S&P 500 is down a little bit today, but the Dow is up. But if we wanted to understand about sectors, we simply need to head right on over here to this Sectors tab. When I click on that, now we're presented with a very different look. Here we have two main items on our screen, a sector performance table and a business cycle table. To round out that conversation you've already talked to us about here, James, I think we should glance at this business cycle table here for just a moment, which helps us understand that at some point in the economic or business cycle, when we're in the early phase of that business cycle, for example, when companies are beginning to expand, when maybe monetary restrictions are light, maybe there's even some stimulus going on to get us back out of a previous recession, companies tend to be growing, but not necessarily all. Some companies wouldn't do quite as well in that scenario. And based on the pluses or minuses here, we can start to see which areas of the market might do better or worse. These are divided up by sector. And since today our main focus is that subset of sectors, the industry, we're going to go ahead and move past that. But if this is a topic that's of interest to you folks, I would encourage you to spend a little bit of time right over here on this tile. Use the little eye icon up here to get some additional information, or you can even click down here to see Fidelity's interpretation of the current US business cycle and of other economies across the world. But let's glance over here at the sector performance table, where we see that amongst those 11 sectors that you highlighted for us, James, we've got vast differences in overall performance. For example, if we look at exclusively this 10-year performance column, we notice that almost all of them are positive. There's a dash here for real estate because, like you said, that's a relatively recent addition to this listing. All the others are positive except for energy. Energy has had a pretty rough run. Recently, doing quite a bit better over the course of the last 1 and 5 years, but over the course of 10 years, it was bad enough in the first of those 10 years that unfortunately it is still down over the course of the last 10 years. So there certainly can be a vast difference in the type of performance you might see based on where you choose to invest your assets over time. Losing 1.5% over the course of 10 years versus making 568% in the information technology sector is a dramatic difference. But altogether, the S&P 500 was somewhere in the middle at 177, smoothing that out. Here we're undoing some of that smoothing, looking for opportunities to both shed potential losers in the current environment that we see and to sway towards potential winners as we look at what is likely to outperform in the near future. Now let's continue to scroll down and take a look at how this page is broken out. Now, if I open up this first tab, it's going to look pretty similar to what James showed on the slide, showing us that communication services has currently a 9.2% market weighting. So that's how large it is compared to the other things in the S&P 500. And these are some of the big companies that you might recognize currently in the communication services sector. We also see a nice chart that shows us that communication services has been going up and to the right, performing rather well over the course of the last 6 months. There's a news stream right here where we can read those items in the news that are likely to be affecting the communication services sector. We could pull up any one of these and read to our heart's content all about what's happening in the world. But there are many different sectors here that we could glance through. Let's just take a look and scroll down and see what else we see on this page. For example, we find a table all about the industries that make up this sector. Communication services as the sector and its child industries as diversified telecommunication services, entertainment, interactive media and services, media, and wireless telecommunication services. Each of these an industry inside of that communication services. And just like we looked at on our performance table for the sectors, we see that the performance here could also vastly differ. Over the course of the last year, we've seen some as positive as 50% up and others negative. Let's continue to scroll down and see what else is inside of this sector total. We see some details about the fundamentals for the companies that make up this industry. And as we continue down even further, we find that we could jump on to other sectors time and time again. Let's go ahead and take a look at that largest of the sectors, information technology. As you pointed out, James, yes, it has crossed that 30% threshold, almost 1/3 of all market capitalization out there. It too has had a relatively positive last 6 months, and we have news here. Again, if we take a look at the performance of its relative industries, well, over the last 10 years, for which we have information available on all of these sectors, we find some amazing performers. The sector as a whole, we already highlighted above at 500+% positive over the course of that time frame. But it turns out some of that performance came largely due to two industries. Specifically, semiconductors. If we go ahead and sort here by our 10-year list, we find that semiconductors has been amongst the top performing industries over the course of the last decade at over 1,000% performance. In other words, 10 times your initial investment in profits, an amazing return. All of these returns are looking backwards in time and do not tell us that necessarily semiconductors will continue to outperform into the future. But supposing that we're under the impression that, at least in the near term, there will still be opportunity in the semiconductor world, and we would like to find some investment opportunities in this area, let's take a look at our first step to putting this into practice. I'm going to scroll back up to the top of this page, scrolling all the way back up. Again, we arrived at this page by going to News and Research, then Markets and Sectors. Now we have a button here that we omitted talking about previously. If you click on Screener Tools, you'll have the option to either screen for stocks or for ETFs or for other types of securities that we aren't going to cover today. Let's start with the stock screener. When I go ahead and click Start a Stock Screen, I'm presented with this page, which you will become familiar with if you aren't already. All we need to notice is here on the left-hand side that we have the ability to add criteria. For example, let's start by just supposing that we'd like to look for stocks that make up some part of the sector and industry and sub-industry. And here I can scroll down to information technology. And specifically, we were interested, as an example, in the semiconductors and semiconductor equipment industry. When I narrow it down thus, we find that there's still 137 companies that match that criteria. That might be more than you or I have time or willpower to research in a detailed basis. For sake of our discussion today, let's go ahead and narrow it down to also be those companies that happen to be components of, let's say, the NASDAQ 100. Narrowing it down now to the NASDAQ 100 semiconductor stocks, well, now we're only left with 17, a much more manageable number. We've started to weed through these to some level that maybe could be of help to us. As we glance through this list, some of the names, again, will likely look familiar to you. We see names like AMD, Advanced Micro Devices. We see Micron. We see several others here on the list. When you use this stock screener, it is to help you identify a few stocks that you think are of note and interest for you to dive even deeper. That deeper dive that you'll be doing is where you make the decision either to invest or not to invest based upon what you're looking at. But there is much to understand as we work through them. So just as an example, why don't we check a few of these boxes and we'll take a look at how they have performed over time. I clicked the box for Broadcom, Qualcomm, and Micron, just for an example's sake. Supposing that after glancing through this list, we would like to do a little additional research to understand how these compare. Well, I can come up here to this drop-down menu at the top and choose to show only those that I've selected. I'm ready to narrow down my search just a little bit. Show only selected, and I hit go. And here I'm presented now only with those 3 that I had selected. With those selected and my focus narrowed in from several thousand stocks in the beginning, 137 semiconductors, the 17 within the NASDAQ 100, now we're left with 3 that we're looking at for an example. If we go ahead and click on the next tab over, Basic Facts, we'll find that there are some interesting things we should note. For example, these companies all happen to be relatively large. Broadcom, coming in at 600 billion, is the largest of these and is characterized as a mega cap corporation. The other 2 over 100 billion, but called a large company. Each of them located in the United States, information technology, and they are semiconductors. So all of this looks kind of similar. But what else do we need to know about these? If we go over to the performance and volatility page, we see that, for example, the price performance of each of these over the course of the last year has been rather positive, almost 100% positive for Micron, 75% plus for Broadcom, and Qualcomm somewhere in the middle. But we see a couple other columns that you may or may not be familiar with. There is much that you can learn from these different ideas, and we notice that there are two additional tabs, one for valuation, one for analyst opinions, that you could continue to spend a lot of time researching and understanding. For the moment, I'm simply going to come over here to the left-hand side, right here under definition. If you would like to see more information about any one of the columns present here, you can simply click on definition and you'll be brought to our glossary, which will give you an explanation for any one of those characteristics. You may just need to scroll to the area you're interested in to find exactly what it is you're looking at. But folks, this is how you might start this screening process, helping you understand a little bit about what is available. All we've done so far is said, maybe these stocks are the right ones. But James, you showed us that some 61% of this stock's performance might be based on choosing the right stock. If I'm uncomfortable picking just one or even a handful of stocks personally, what other ways can we go about investing and choosing this in a maybe more aggregated sense?
And we really wanted to try to make sure that we're not just focusing on stocks, because when it comes to trading and investing, right, a lot of folks are interested in other products such as mutual funds and exchange traded funds, or ETFs for short. Now, when it comes to trading, typically, if you're thinking about investing, you may weigh mutual funds and ETFs equally. But when it comes to trading, many folks do enjoy trading. Well, ETFs, they do have trading in the name. So I want to also talk about some of the ways that we can maybe kind of help kind of diversify, right, your approach to trying to speculate on a particular sector, because on a particular industry. Talking about the semiconductors, looking at these three stocks, you may say to yourself, well, okay, right, these three are meeting specific criteria that you might be interested, but maybe you can't decide which one to pick. So there is a fantastic tool that can possibly help you not only maybe incorporate multiple stocks kind of in one trade, but maybe find some new investment products out there. So I'm going to bring us back over to the sectors page. And within this window, we have a few other tabs up towards the top. Now, stocks, clicking on stocks will take us to the stock screener. This is where Jake had us earlier. But I'm going to go ahead and click on ETFs. On this page, and this is for those of you that haven't been here, this is our ETF research landing page where we can get to an ETF screener similar to what Jacob showed us on the stocks, and we'll get there momentarily. But there's also a fairly, let's say, interesting tool that I would say is underutilized, and that is going to be search by stock. So scrolling down here, we can see this large tile front and center. And just reading what it gives us, not sure which symbols to search for. Here are some ideas based on today's S&P 500 movers, where it picks a few symbols. And this will find an ETF that holds a specific stock in the fund's top 10 holdings, which oftentimes those top 10 holdings are going to make up a majority of that product. So using the ones that Jacob found here, they were Micron, so typing in the symbol MU. There was Qualcomm, COM. And then finally, Broadcom, AVGO, AVGO. So I've got these three chosen. Clicking on View Matching ETFs will, as you can imagine, give us matching ETFs. And we're picking these three that we know are in the technology sector, but more specifically, they are in the semiconductor industry. So what is this going to do? Looking for those ETFs exist that have these three stocks in the top 10, And it's going to even tell us the exposure that that ETF has to that stock. So here, just taking maybe a look at these kind of top three: iShares Semiconductor ETF, Invesco Philly Semiconductor ETF, and the VanEck Vectors Semiconductor ETF. So we've got a product, we've got about three different ETFs here from three different companies that have three somewhat similar but also different ETFs that are designed to track what? Semiconductors. And we can see the exposure that they have. So Micron, they both have about 4%. Qualcomm, the iShares product, has about 7.5% and 4% for the others too, respectively. For Broadcom, you can see 7.5, 10, and 8%. And then we get the final exposure. And this is sorted by the total exposure because its goal, this tool, the goal of it wants us to find the ETF that's going to have the most of what we put in. We could put in 4 symbols. We could even put in up to 5 stock symbols, and it's going to give us a column for each. Now, there is a quite a long list of different ETFs, and maybe we want to then kind of research some of these funds here. So SOXX, and let's go SMH here. And let's take a quick look at maybe the differences between them, because like with everything, right? There's more than meets the eye. So all because it says semiconductors doesn't mean that it's going to be the same fund. Oftentimes these funds, they're trying to, again, track what semiconductors are doing, but they have their own special way to do so. So again, SOXX and SMH. So let me go ahead and scroll up now to the top where we can search or get a quote. This is where we could put in a symbol, or we could click on the symbol here. Either way, we'll get you to that individual kind of ETF research page. But let's say we want to find maybe more ETFs that kind of meet this requirement. Well, we can absolutely do that. So we'll come back and take a look at kind of these ETFs, maybe a deeper dive specifically, but there are other ways that we can find ETFs within a particular industry that we're looking for. And one of the best ways to do it, my favorite tool when it comes to fidelity.com, is going to be the screener tools. Jacob showed us the stock screener, so let's dive in to the ETF screener. It's going to look very similar to what we have on the stock side, but because now we're looking at, well, a different product, there's different criteria that we could use. Over on the left-hand side, I'll minimize this. These are the criteria categories. And then from here, we can kind of dive down into the various criteria. And by expanding exposures, oh, would you look at that, right? There is an industry exposure. So if you have already made maybe a forecast or some type of industry that you found that you're looking to speculate on or invest in, we've got the list of these industries down below. Now, we can keep the same theme going, the semiconductor industry. Here we are, semiconductors and semiconductor equipment. 1,459. Well, there's more than meets the eye. If we click on this, 1,400 is, of course, right, far too many ETFs to look from. Now we have this exposure kind of slider here. And we can imagine, right, if many ETFs could have a couple of stocks that fall under the semiconductor industry. So we may want to kind of fine tune this to only choose ETFs that have the vast majority of their underlyings with stocks in that industry. So let's go ahead and put in a percentage, 51, so at least half. I want to go fairly heavily concentrated, maybe sticking to that semiconductor namesake, and go to 90. I'm going to click enter on my keyboard. And we went from what was it, 1,400 now all the way to 7 ETFs. Oh, I unchecked that. Let me go ahead and click it back. There we go. So here are the 7 ETFs sorted by the percentages of the percentage of exposure that it has. And what were we talking about on the other page, right? We saw SOXX, SOXQ, and SMH. So actually, let's just pick these two here. Now there's a variety, right? They're from different fund companies. They're still meant to track the semiconductor industry. But let's go over to basic facts. And just taking a look at some of these tabs will let us know there are some differences. Different company, different sponsor, whether it is passively or actively managed. All of these are passive. The benchmark index, and this is kind of key. The reason for that is that this is the way that the fund kind of measures just how it's kind of doing against some index that was created. Now, just looking at this tells us that these funds, even though they're in the semiconductor industry, they all follow different benchmark indices. And that's going to be the main kind of driver as to why the performance, which we'll get to shortly, is going to be very different between these funds. But just continuing basic facts, we've got a few other categories that may or may not be important to you as a trader or investor. How many shares traded today? How large is the overall fund? And if I click on, say, net assets, it's going to then sort it by the largest to smallest. Here we can see, well, two of the ones that we looked at earlier here are the largest by net assets. How long they've been in creation, and if they're optionable for you options traders out there. Now you can go to income characteristics, technicals, analyst opinions. Let me just click on performance and risk here. And I think this will really drive home how different these funds can be from one another, even though they both say semiconductors. Let's click on the year-to-date returns. The top fund so far this year, 22%. We've got one of these semiconductor ETFs that's actually in the red. And this is just a reminder that even if, and the ones that we were looking at, SMH and SOX, 22 and 11%, still quite a significant degree in their performance, despite having those three stocks that make up roughly about 20% of the fund. But it's the overall mixture that really is constructed in that composition that can determine, well, just how these funds perform. And we have longer term views. We can go back over 5 years. Looks like the performance somewhat kind of tightened up, at least from the annualized. But of course, over 5 years, even a few percentage points in the annualized performance, year over year over year, can start to make a big difference. So this is where you can possibly go for those of you that either have a few stocks in mind in any industry. We chose semiconductors here, but maybe you're not even sure what kind of industry that they're in. You pick a few stocks that you believe are fairly similar. Well, that tool on the ETF research page can help you find that ETF that's either following that sector or that industry, or you can go straight to the screener page, find that industry exposure, find that industry that you're looking for, set that maybe minimum exposure that you want to screen for, and then you'll be provided, if there are, oftentimes most of these industries do have a specific industry ETF created for it. If you've got multiple ones like the semiconductors here, you can then start to dive in a little bit deeper. So Jake, I know that I think we've used SMA, SMH, and SOXX for this time. Possibly continue unless you want to add some new symbols here, but I think it's worth probably diving into these even a little bit deeper, especially if we've gone from 1,400 to 7, and now maybe we're looking at 2 funds. So I'm curious which funds that you'd like to take a look going forward.
Thanks, James. Yeah, absolutely. So this gives us a great opportunity, right? Kind of two ways to arrive at a potential decision point. Maybe you've heard of or know of or got a tip from a friend, a neighbor, a colleague. You heard it on the news, some stock that's doing well. Well, here's a way for you to find now a relatively diversified approach to making that investment instead of putting all your eggs in a single basket. But even within that semiconductor name, notice that all of these have semiconductor ETF in the name. Nonetheless, as we see each one of those and their relative changes in performance, like you said, James, there certainly seems to be something different about them. So let's go ahead and jump over and take a little deeper look at the two different funds and learn about the different ETFs that do exist. In this case, we're going to go ahead and type in the symbols for each of those. We're going to take a look first at SMH, and then we'll also compare over and take a look at SOXX. But SMH, as we see, was that largest of the funds, and it says it's the VanEck Semiconductor ETF. Today, it's losing 1.5%. Not a great day if you happen to have invested in that one today. But as we scroll down just a ways, we start to see all sorts of details available to us here as investors at Fidelity, including a more detailed quote telling us again the net assets of the fund, how to access all sorts of other characteristics, a recent chart of its performance. It certainly is one of those that's done rather well year to date. And as we scroll down, we continue to see other ideas. For example, some analyst ratings. Continuing on down our list, we find a profile telling us about the holdings of the company, and even down here towards the bottom, we find news related to the specific ETF. But this was only one of several different tabs available to us. Today, let's take a little deeper dive into the composition of this. If you came to this by way of searching for individual stocks and an ETF that holds them, I would strongly encourage you to come to this composition page to learn what it is that this fund is comprised of before making your final investment. In this case, we find a detailed explanation called the prospectus stated objective. The prospectus is the legal document that governs how a fund invests your money as an investment vehicle. And therefore, as a result, you should probably give some thought to how they intend to invest your funds. In this case, like you showed, James, they are following the MVIS US listed semiconductor 25 index. That's not an index I'm familiar with out of left field. Maybe you are, but probably we're not. If you want to understand a little more about how they make their decisions, it's probably worth researching what this index really is. Is it what you want to be invested in? Maybe, maybe not. But it's what this fund will invest at least 80% of its assets in at all times. It also tells us that it's a passively managed fund, meaning it's not trying to beat the benchmark, MVIS benchmark. Instead, it is trying to match it. It's trying to do that same thing by way of investing in the companies that make up the index. As we scroll down a little ways, we can see that that results in an interesting situation where, in this case, there are 26 holdings in the ETF as a whole, but because they're trying to match this particular index, and the index has a heavy weighting in a few stocks, we see that the top 10 of those 26 make up 70% of the portfolio. That's a lot of focus. And as we scroll down a little ways further, we see that the top holding is NVIDIA at 1/5 of the total portfolio, 20%. Another 12% to Taiwan Semiconductor Manufacturing, and then Broadcom at 8%. Between simply these first three, we're already at 40% of the total fund. If you approached this ETF because you didn't want to put all your eggs in one basket, then you find out that 1/5 of all your eggs are still in one basket. Maybe that's too much for you, or maybe that's exactly what you intended. But one way or another, it is certainly of note that this is the composition of the fund. We also see that almost all of the holdings are very, very large cap corporations, and only a small piece are the smaller companies out there. As we scroll down through the list, we continue to get additional details on each one of those fund holdings. If I scroll back up and switch over instead now to SOXX and look at the same details for it, notice it keeps us on the composition tab. It too has a stated objective, but its index name is not MVIS. This one is based on the New York Stock Exchange Semiconductor Index. Maybe that's a little bit easier for us to understand since most of us have at least heard of the New York Stock Exchange. But again, it's going to invest 80% of its assets at least into the securities making up that underlying index. It too is passively managed. And as we scroll down, we start to see here is where we have some deviation in the portfolio, where instead of 70% plus in the top 10, well, now we've only got 60% in the top 10. And when we look at which corporations those happen to be, NVIDIA, which was 20% of SMH, only represents 10% here. Then 8% to Broadcom, which, if you recall, was third in line on the other ETF. And instead, TSM, Taiwan Semiconductor, isn't even on the list, at least towards the top holdings. So there is some clear changes in both which stocks make their way into the portfolio, as well as how much of that specific stock makes its way into the portfolio. In other words, which ETF does change dramatically the performance, but not because the ETFs are better or worse at their job, but rather because they have a different underlying portfolio. And why do they have a different underlying portfolio? It all comes back to that index that they are trying to follow. Other key comparisons as we think through this can come as we look through the other characteristics here. You're welcome to do some additional research at each one of these different tabs. For example, under distribution and expenses, we will find a breakdown of the expense ratio. Owning a fund does have a cost. You are putting your investment into a fund which must be managed by someone else. That manager does take a cut. Their expenses amount to 0.35% on an annual basis. You never have to write a check for this, but rather it comes out of the value of the fund over time. But that 0.35% is a cost of owning the fund. If we come over here to the left, we see all about distributions. This is what we might think of as a stock investor as your dividends. Dividends are typically paid out on a quarterly basis. ETFs have distributions because they don't pay a dividend directly. Rather, they are owners of stock and receive dividends from those companies. If and when they receive dividends or other distributions from companies, they in turn pass them on to you or I as investors in the fund as what's called a distribution. Those often also happen on a quarterly basis, but there are some funds that instead do that simply on a yearly basis. So you can watch out for the basis. But one way or another, you can look at this distribution yield. If you are thinking of investing in semiconductors in order to get a high dividend, well, it turns out you're only receiving 0.59%. That's the kind of yield you expect on cash 5 years ago, not the yields that you might expect hoping to get a nice return on a dividend. 0.59%, clearly semiconductors do not appear to be a high-paying industry in the dividend world. There's other ideas related to these along the way, but I want to make sure that we leave plenty of time for the additional pieces that we've got prepared for you. Looking at the composition of the portfolio, understanding how these relate one to another gives us some interesting opportunities, but let me show you one final page here on this detailed exploration, and that will be our comparisons tab. Under comparison, we're able to see very quickly how this specific fund relates to some others that are relatively similar. We could dive deeper and look at the most similar ones in other ways. We already saw some that were similar based on what we had screened for in the ETF screener. But here under comparisons, I encourage you to take a look and see what we can learn about. First, we find the different companies that we might compare against, and there are several, and some of the key characteristics. But as we scroll down the page, now we have the opportunity to compare against anything we would like. Let's have SMH up here as our second security. If we've got these two that we would like to compare against, well, one opportunity would be for us to look at the basic facts and performance. We've likely seen most of this through the various pages we've already looked at, seeing, for example, the total return year-to-date difference between the two funds. If we go ahead and take a look, though, at other characteristics, for example, maybe we're interested in the long-term performance and risk. Let's go ahead and click on this and see what else amounts here. We see that over the longer term, it has been a relatively consistent thing that SMH has outperformed SOXX. Why is that? If I scroll down and take a look, we can see some of the other characteristics that show up in relation to the overall volatility and outperformance. Those of you who are statisticians might be familiar with the terms of R squared or beta or the Sharpe ratio that all show up in detailed financial analysis of a security for investing. All of that is available for you right here. That was under long-term performance and risk. But we also have other characteristics. How do these relate to their technicals? For example, are they above or below their current simple moving averages? And if so, by how much? We can take a look as well here under the tax distributions. How much are these paying out in distributions, and is it reasonable for us to expect that they will be similar in the future? All of this can be done here on this Compare tab. Now, we're approaching the end of the session here, James. I'd be remiss if I didn't give you the opportunity to add in some of your thoughts as we dove deeper into these two funds.
And based on maybe a few of the questions that are coming in, I want to also show just some kind of extra resources if anyone is interested in kind of following up with this sector and industry discussion, how to possibly find a little more info out there. So I'm going to take us back over to the sectors page. And hopefully everyone remembers this. This is where not only the sectors are broken down, but where you can find the industries. And if anyone really enjoyed that screener and whether the stock or the ETF screener and that approach to finding an underlying, whether that be a stock or an ETF, these links here will do a lot of the work for you. Keep that in mind. Clicking on something such as stocks, it's going to then bring us directly to the stock screener. And what's nice about it is that it's going to kind of get you ready to start diving into, in this case, the communication services. We could click on ETFs. It's going to bring us directly to that ETF screener. And similar to the stock screener, it's going to start pre-filling in some of the ETFs under at least that theme, that sector. And then remember, if you're looking for the industries, you can do so further by narrowing down the exposures. In this case, I've already included communication sector. So it's really going to be looking more so the industries kind of that fall under that communication sector. We can see a few of them here. But in addition to just some of the tools within Fidelity's kind of primary website, under this View Current Phase, this link will take us over to the institutional side of Fidelity. From here, it does go into the business cycle, which is maybe a step kind of further than that we'd want to take this webinar. I know we do have webinars and our own coaching sessions that cover the business cycle. But scrolling down here, you can find a few other of common updates. Specifically within the investment research update, and I'll go ahead and click on this, you can find the most up-to-date kind of report from Denise Chisholm, who focuses on oftentimes not only the overall market, but sectors and the industries within them. So if you are looking for kind of more information on this, take a look at the investment research update. Now, one final topic I wanted to quickly discuss here, and it wouldn't be kind of a trading strategy desk session, in my opinion, without at least focusing briefly on a chart. Now, we talk about looking at the variety of stocks and ETFs at some of their data, right? Jake was showing us the composition. We looked at some of their stats, quickly talking about net assets. But for those of you that are interested in seeing just maybe visually how price has changed over time, you can use the variety of charting software that Fidelity has. Now, under accounts and trade, you can pull up the trading dashboard from this link. Or for those of you that have dabbled with Active Trader Pro in the past, which is a free application available to everyone here at Fidelity, you could use the platform to possibly chart how and visually see how these stocks and ETFs have performed. So what I did was quickly throw up a chart here, just to use an example, where we have 5 symbols. And if you remember, these have been the symbols that Jacob and I have used for today's session for kind of the illustrations and educational purposes. We've got our 2 ETFs, SOXX and SMH, and we've got 3 stocks. The ETFs, I made solid lines, black and gray. These stocks, I've made a variety of the RBG colors, red, blue, and green, and I made them dashed. And I think this also is a good reminder of how, stocks can certainly outperform, right? If that individual company is doing well. This is the 1-year time frame. We can see some of these dashed lines are kind of above our solid lines, but look at the range in movements, right? At one point, the stocks was underperforming everything and then quickly moved upward, right? We've got greater oftentimes volatility in an individual stock as opposed to an ETF where their volatility is spread across tens, maybe even sometimes hundreds of different stocks within. And we can compare it a variety of time frames, say 1 year, maybe we want to include 2 years of data. Again, we can see the differences between individual stocks, one outperforming, one underperforming, one kind of somewhat in line with where the ETFs have been. So this could be one final way that you could approach your own kind of investing and trading of industries, and that is paying attention to some of the charts and how they're doing from a price perspective, maybe after you've used some of the tools to find them. And at this point, I know we are right here at the top of the hour at 1 o'clock, and I do want to be respectful of your time. Keep in mind, everyone, Jacob and I will be back tomorrow at noontime for the follow-up Q&A session. We'll be here to answer some questions live, possibly show a little further demonstrations of some of the tools that we use. So we absolutely want to invite you to join us then. But Trey, I'll save the final words for.
I just want to thank you both, James and Jake, for joining us, as well as our audience as well. If you are interested in signing up for that coaching session that James mentioned, the button to register for that is directly below the viewing screen. And of course, you can find all of the coaching sessions offered by the Strategy Desk at fidelity.com/coaching. After today's webinar, you will get an email with a few of those links as well. So if you don't want to write it down here, you'd like to come back to it, just check that email. It'll come out to you in about an hour. But with that, we will close it up from here. Thanks again so much, everyone, for joining us, and we'll look forward to seeing you in the next one. All right. Bye-bye.